Good morning, everyone. This is Daily Trade Analysis with the weekly recap. Today, Saturday, 30th of September. Now that we finished the month of September, I'm going to produce and provide you with a weekly recap the last week of September, in which, as always, we are going to review fundamentals for the week and also technical analysis from top to bottom from the monthly chart, weekly, daily on the Nasdaq, and also individual stocks for the big tech companies, reviewing dollar, sector funds, and all interesting charts that you need to know to understand this week and also prepare for next week ahead. So first, we are going to review the fundamental data. We started on Monday with Dallas Fed manufacturing still showing signs of decrease, minus 18. Then on Tuesday, we got consumer confidence a little bit lower than the previous one, the 108 to 103, a little bit of concern regarding consumer, and new home sales month over month continue breaking down minus 8 month over month. Then we continue Wednesday, Thursday, and Friday with the big ones. On Wednesday, we got durable order goods month over month that saw an uptick. We were expecting negative 0.5 from the minus 5. And good orders, durable good orders month over month increased 0.2%. I think this was quite a surprise, and also excluding transportations 0.4 instead of the 0.1. So this started the good news on Wednesday. The Nasdaq bounced a bit of a critical pivot that we are going to review, and on Thursday and Friday we got the big ones. We got the GDP growth rate quarter over quarter 2.1 as expected. The consensus was 2.1, and price index came lower than expected. And this is good news. From the 3.9% price index quarter over quarter for the GDP came lower, cooler than expected. Also, jobless claims, as always, initial jobless claims came a little bit higher than expected, not as we were expecting, 215,000 from the 202. That was the previous one. We uptick a little bit, and more data regarding home sector, pending home sales on the negative both, so showing signs of cooling down. Thursday also good data from the GDP, and on Friday the final data in terms of core PCE price index, and month over month came a little bit lower, 0.1. We were expecting 0.2, but the PCE, the general PCE, came in terms of year over year came as expected. So imbalance, a little bit of uptick from the 3.4% year over year, and month over month, this was definitely a little bit of a bummer. 0.4% increasing from the 0.2, and slightly lower than the consensus, but for sure PC prices month over month showing a push higher is not good. I think Friday we got a little bit of bearish sentiment for this data, but overall the thing that I think crashed the markets is this: shutdown of the government appears more likely. And look at this, the government is scheduled to shut down this Sunday if the funding bill is not approved by Congress and the President Joe Biden. I think this is the key data. Apart from the fundamental data that we got on Wednesday and on Friday, I think the fear is the government shutdown that is looming. This Sunday is most probably than not, maybe it will happen for 11th time in the history. This is the NQ continuous chart. This is the, let's go to the monthly chart. This is the monthly. Each candle is a month. And as you can see, this was the latest, the last of 2022. Sorry, the beginning of 2022, the last month of 2021. We went lower, and we found the famous bottom of November 2023, and then we move higher. Where are we stopping? So right now we are doing a higher low down here, And on the month, we are a little bit bearish, but in the context of this pullback, we are basically finding some support at this level. That was also a key level here. We are going to see that on the weekly and also on the daily, but you have to really see the context. On the monthly chart, we are pulling back a bit, but we were 1, 2, 3, 4, 5 months in a row in the green. We got a good August, and now we are pulling back a little bit more. So don't forget this context, because sometimes we lose sight of this context, and we are in this range. This is the weekly chart now. We are seeing the first week of pullback, a bounce, and now the second pullback. It is clear that we are seeing this, we are starting to see this triangle formation, descending triangle. But on the daily, for sure, well, first on the weekly, look at this doji. Doji is quite important on the weekly. And on the daily, we are going to move to our contract. On the daily, the NQC, this is more detail. Look at this detail. Descending 1, 2, 3 points. We have this support on the descending triangle. We got this range, and basically we lose this pivot. We touch base down here, the low of this range, and we try to push higher. But look at Friday. I think if we zoom a bit, we got Wednesday and Thursday good fundamental data, and then on Friday things started to go south. We were trying to push higher. Look at the level. We squeezed all these people. I was talking about a short squeeze because that was what was happening on the technical side, on the cumulative delta and all the data that I have in terms of contracts. It shows an open interest. So everything was nice for the Friday short squeeze, and we kind of did it. But I think the government shutdown fears was a killer. On the 30-minute chart, we can see that. So we got this low, then the ascending. We are still in that range. We push higher on Thursday, and we got several key, let's go to the 1 hour chart, several key ranges. This range on the 1 hour chart that we failed and we started going lower. But this was not a big red day. The only thing that happened on Friday is that we were stepping up into the open. We open up here and we close the gap. Nasdaq finished the day 0.0.5. So it's not as bad as some people trying to show. We are still trying to defend the weekly low. We held pre-market low and bounced a bit. But what is clear is that it was a bloodbath for all the people that was long up here in the gap with the fundamental data. As soon as we started seeing these lowers and this descending pattern, I mean, the potential to the downside was a lot. And we closed the gap. That's the only thing that happened on Friday. We closed the gap because fears on the government shutdown. A lot of people were closing positions, and that's clear. Why? Because if we move to dollar, we can see that this was the economic data time and this was the open. Since the open, we saw a lot of people going bullish on dollar. So I think dollar got bought up quite heavily, as you can see, because basically people were going cash into the weekend. A lot of profit taking. I don't think shorts are open interest into the weekend with this shutdown, because they can be short squeeze if the shutdown is not happening. So this is my understanding and my approach on the week. We got a decent week until midweek, and on Thursday and Friday, shutdown fears is starting to appear, but we are still holding this line is last week low, this line is last week high. We are at the bottom, but we are finding some kind of bounce. Where are we bouncing? We are bouncing from a critical, I think, interesting range on the Nasdaq 14,600. And the only thing that is concerning is that we are uncertain regarding the shutdown, and we got a little bit of bull trap and people liquidating positions on Friday. That's the thing. We are still on the weekly basis. I think we are holding quite well, but on the daily, we are starting to see some kind of descending triangle that is a little bit bearish. We need to see what is happening next week, because if shutdown is not happening, I can see the Nasdaq really pushing towards this conjunction on the 45 and 20-day moving average on the daily, and trying to find some squeeze on this structure. If not, obviously shutdown fears will remain and we might see some weakness to the downside. But I don't think the context is as bad as some people are trying to show. So just understand that. In terms of individual tech stocks, Apple closed a little bit of this gap here. We bounce a bit and finish 0.30 in the green on Friday. Still remains under this breaking of structure, still doing lower lows and lower highs. This gap is quite interesting to at least see a bounce of that, as we saw on Thursday. But still, we are in a downtrend. Be really careful. Try to find some structure on the reversal on the daily. Finding some gaps like this one are really key interesting levels. Microsoft also finishing in the green, still the same structure that we are trying to hold, pushing back higher. A lot of stocks were gapping up on Friday, and it was quite a bummer to finish the day with that gap fill reversal on the NQ due to the shutdown fears. But still, we have some kind of bounce on a lot of these stocks. Tesla still remain this little gap up here. And on the bigger trend, we have this A, B, C, D possibility that might happen at some point. And I think this is quite interesting. This structure on Tesla, bigger high time frame. And I think it's really interesting. They are holding, they are putting a higher low and ABCD pattern for a break. That might be a potential possibility. Amazon, after really bad days last week, this week, trying to hold this structure as all tech stocks are trying to do, look below and fail. This gap is really key to see what it does, because look at this trend line. We did a gap down there, and the first thing that bulls want to see, I would like to see, is this gap to be recovered. In terms of Google, well, Google was a gap down here. It bounced off this clear structure. It didn't touch the gap. And now, as you can see, we can remove this gap, this mini gap that we got. We can remove that. And we still have this other level of resistance support. I mean, it's quite clear that a lot of sellers are here. We are bouncing, and we might see some structure here to continue higher. That's the play. We need to reclaim 135. That's the level, this level. Nvidia, as choppy as always, conjunction on the daily, on the 20 and the 45. A lot of resistance ahead. A lot of people are short. A lot of shorts also here. I mean, it can squeeze, but we have nothing. We don't have any structure. We don't have nothing. Nvidia is nothing for me. And finally, Meta, a nice bottoming candle on Wednesday, trying to push towards this descending resistance. This week is concerning, but I think the overall trend, it's higher lows, wedging, ABCD also, as Tesla is pointing out, quite a possibility. So a lot of tech stocks are trying to find some structure on the daily, big time frames. So pay attention to that. Not only pay attention to the daily and intraday moves, but also the context. Some of these are looking quite good. So apart from the individual tech stocks, I always like to review the sector funds performance. As always, XLE Energy, we're going to review that chart late in 1 or 2 minutes. And utilities are being smacked down, healthcare, staples. So really a rotation lower from defensives. So not defensive, but energy is still a problem. Technology is barely flat on the week on the 5-day performance. And basically we have nothing. We have nothing on the sector fund performance. The big issue is crude oil. We have this pivot that we broke. We got this pivot that we pulled back and then broke again. But look at these two candles. Big rejection of October 2022 levels. To see really the context, we need to see that we are at insane levels. This is a critical level. $93 per barrel are quite critical, and we are just there. 92, 93, we are there. We tried here, we bounced it down, we tried to push through, but we got smacked. So at least energy is finding some good sellers up here, but look at this. I still have the golden pocket feed 1618 retracement, because I think once we close below this, I think we are going to see a lot of buyers down here. So energy is still a concern, is still a danger in the midterm, because it will push inflation higher, and that's another concern to worry about. So in terms of sector performance, as long as energy remains strong, I don't think inflation will progress as everyone is trying to see. So yields, as you can see, are still, we got the channel, the upper band of the channel, right now seeing some kind of weakness, but we are in the middle of the range. So nothing on the 2-year. The 10-year is even more bullish. Look at this. Oops. Look at this. This was a real fail, but where are we? We are in the upper band of the channel. The 10-year and the 2-year are really bullish. And if we check the inverted yield curve, more concerns. Look at where are we? We are in the upper band of the range that we haven't been in this range since May 2023. And more, the yields are uninverting, and this is more and more a worry, a concern for the midterm, because at some point, Fed will reach the terminal rate, the 10-year will continue higher, we will uninvert, and something will break, and the Federal Reserve will start cutting. And then we'll continue pushing towards positive territory, but that's not bullish. That will mean that something is sick in the economy, and most probably stocks will go down. So be real careful with the uninversion of the yield curve, because this is another concern for the long term, another technical resistance for stock market and the equities. In terms of banks, XLF, really painful. 2 weeks of pain. We are seeing basically lower lows, lower highs. I mean, this is quite clear a trending down market. So financials are feeling the pain. Small caps, I think, are also feeling the pain. Look at this. There's just, look at this structure. So it's quite clear that small caps, Russell, we can remove not the entire gap, but really bad day. Really bad day. This is a big body of a red candle. So small caps feeling the pressure down. The Bitcoin is just chopping around in the middle of nowhere. And overall, I think for equities, it was a decent week with a bad Friday. Tomorrow, Sunday, we'll have news. Is the deadline for the shutdown, and we'll see what happens next week. That's going to be the first thing, the main concern for investors and traders. And I think that caused a lot of pain on Friday, but overall fundamentals were not bad. And I think if the shutdown is solved and we can move forward with the economy and the funding of the government, we might see some potential continuation of this bounce. This bounce was really key on this level. So I'm waiting, looking forward to see more of it once the shutdown issue is solved. So that's my expectations. I don't think we are that bad. We are still pulling back. We are breaking this was quite an issue, but we can still find some buyers. But if not, well, prepare for the downside, because there's a lot of potential to the downside until 14,000 down here on the Nasdaq. So remain tight, remain flexible, focus on the fundamentals, because the technicals are still there. We are still finding some buyers at critical levels. Some people are willing to buy long term, but short term, the uncertainty is quite high. Last thing I would like to mention, gold. Gold's looking pretty bad, because look at this huge trend line that we broke. Oops. We broke to the downside, and 1, 2, 3, 4 days, the entire week in the red. I mean, this is some big selling. And the next level, it's 1800, March 2023. So gold is quite sensitive to higher interest rates, and I think this compression that we were watching, quite clear. We tried here, but then the fundamentals happened, and higher for longer. Powell, really sellers are taking control of gold. So gold and dollar are quite critical to see in the upcoming weeks, because that will affect the equities and the stock market quite heavily. So be prepared for next week. Main concern, the shutdown of the government. So that's all from my side. As always, if you found these kind of videos useful, please give it a like, subscribe to the channel. I do these kind of weekly recaps on weekends, on Saturdays mainly. I cover a lot of things to prepare for the week, to review the previous week, and also on a daily basis, I upload videos for market forecast, market updates, and market recaps. I appreciate your time as always. Thank you for the views. Thank you for supporting the channel. That's appreciated. I would like to continue providing this kind of views, so please support the channel. And remember that discipline and risk management are key for success. Stay safe, everyone. Have a nice weekend, and see you on Monday.